Hey, good morning, everybody. Good morning. Happy Friday. Happy Friday. Don't lose your ass on a Friday. That's what John says, right? So let's heed to that very, very, very important information. The reason why I think a lot of people say that is because if you've had a difficult week or if it's been choppy and today is not the day to revenge trade, I mean, you could if you wanted to, right? But it's up to you if you want to ruin your weekend. For me, ever since I became a trader, I feel like my weekends are, they're not as fun as they used to be. I just love trading and hanging out with you guys. So I'm sure a lot of you guys feel the same way, especially if you're new. When I was first starting to trade, I just could not wait until Monday morning. It was just so fun, and I hope that you guys are enjoying your time and learning as we go along here. But yeah, so it's Friday, it's the 10th of February 2023. Let's go ahead and get started. So we did finally hit that target. And thanks again for you guys that came out last night and hung out with me for just over an hour or so. We learned some stuff, and hopefully you'll be able to put that into your charts and start trading away on that neutral strategy. Um, but we hit that target, and if you remember last night, I said that, and yesterday before the session closed, that it was suspect, right? It's suspect when my levels aren't hit. So the timing was the variable, and we know that we really stayed patient, I think, through this whole entire ebb and flow of the market, and you can see it finally came into the target. Now we are here in demand. What is going to happen is that sentiment is going to start shifting towards the bearish side of things. Okay, so people tend to. It's kind of crazy. They tend to be more bearish in a demand zone than they were up here, but it's not that crazy. It's actually very difficult for people, right? So I'm gonna push that out here after I'm finished today. So probably about 10:30 or so. I'll download that and I'll put it there in the room. Yeah. So they get more bearish in a demand zone. It's kind of crazy. And up here, they're euphoric. But we identified these zones on Sunday. It took an entire 2 weeks, I think. Right? 2 weeks, is that right? So this happened on February the 1st. We knew that we had this chaotic candle. We knew that this was an imbalance in the market. We knew that price would at some point come back down to here. And it took a long 2 weeks. And I really thought this week it would have happened a lot quicker. But they didn't make it easy. They pushed price up into supply off of Jerome's comments. They then only brought it back to about 61% or so and then pushed it right back up about 76% of that high, and then now pulling it all the way back in. Now, the question is whether or not just because you're in a demand zone does not mean that the market's going to just automatically bounce. Okay. A lot of times you'll get like an initial push off of there, and it can be a good time. But as I said, the sentiment is important. Right. And that's where for me I use the TTM Squeeze Pro. So if we go to a smaller time frame while we're inside the demand, we're looking for those little subtle hints that maybe that the selling pressure is easing off. Okay. So if we come over here and we go, we know that we came into the level. We're going to be paying attention right here to the histogram. Okay. And what I'm seeing so far is that it gave you that opportunity. See, if you notice, we came into the level here, and actually, let me make this a little bit better. So it's going to be about right here. All right, and you can see we started to get the yellow bars. That's what I'm looking for on the histogram. And then boom, red dots, and then we get the trendy blue, and the market moves up. Now, buying a bounce right now in this particular zone is working, if you will, but it's not created any value over 40.75 or 40.85. Okay, and we're gonna have to see that bulls can at least try to get it up over the 40.75 level. Okay. If I go over to the 5 minute, this is where we use the PMZ. Last night, you guys shorted the PMZ. That was awesome. Check out the line in the sand. All right. All part of the indicator bundle. The PMZ for the night. This really held out well. I think you guys went short. Most of you got 10 points out of this trade. You can see here that the line in the sand was definitely the line in the sand. We could not get over that pivot, and then we woke up this morning down in the 4-hour zone. It's kind of how things like laid out. Those how things played out. And getting into today's action, the PMZ high is around 40.67. And the PMZ low is around 40.63.75. The risk is about 3.5 points. And the question is, like, what is the range going to be today? I'm going to take a stab at it, like I always do, and I'm going to say that today's range is I'm going to use the bottom end of this box, 40.32, and up here at 41.03. My overall sentiment is really it's Friday. Don't don't throw a good week away or don't make a bad week even worse. Trade the levels, okay? So when I look at the levels, we're actually below. So we're actually below the levels, okay? So if we come over here and do this right here, notice that your daily edges are up here, okay? So now they're resistance, all right? And notice that 40.85 by 40.96 is going to be the line in the sand and the edge. So if you will, this is your resistance, okay? We're going to combine these levels. So if price shoots up out of the PMZ, this is what I'd be looking for, but be careful, all right? Be careful because I don't think it's going to be easy. One thing I do like though, okay, is that the trajectory down is pretty sharp. And when we have sharp trajectory to the downside, I'm looking for a nice snapback rally that could get us right up into here. I do want you to take note of any, feds that might be talking that could kind of like, create a different look into today, maybe, cause some volatility. So it's Friday, February the 10th. You can see if we roll down here at 12:30, we have Fed Christopher Walker that speaks, and then the 2 p.m. federal budget balance. These things, and after the market, interesting. We have Patrick Harker. Okay, so interesting. Where we might end up today. That's what I'm always looking at, especially if we have a speaker at the end of the day. All right. So all those things will, create a little bit of volatility in the market, but again, always technicals first. News is just a catalyst that pushes price into demand and supply. Okay. Now, as far as watches today, let's go over here to Google. That's going to be my watch. I went ahead and sold the shares because I want to potentially get into options. I'm not, convinced yet, but the levels did work. All I did yesterday was I waited for the ES futures to get close to that demand zone. We got that really good pop. I took the trade and Google. I know this might be shocking to some people, but for people who have been here for a long time, I didn't even look at Google's chart. Okay. All I had to do was wait for the ES futures to come into my level. All right. It got very close, like a point or two within it. So I went ahead and executed the Google trade. And immediately Google started to move up. All right. That's what I mean. ES futures is what I use to drive my portfolio. All right. You guys are going to start catching on to this. You're going to be like, wow, that's pretty cool. And really, the blueprint is kind of the mecca. I mean, it is the reason why it drives my portfolio. All I need to know is what the ES futures are doing. Is it going to be choppy? Be careful out there. Are we moving down? Net long on puts. Are we moving up? Net long on calls. Okay. That's the idea here. So my overall sentiment for today is we're in demand, okay, at least on the ES futures, and there's a potential for a bounce up into 41.03, which means the rest of the market could bounce. But you got to take into consideration where we are. Google, this is my plan. Notice that the accelerators are holding. We missed the target down here. We wanted to start looking to get long here. So today, instead of me chasing something, what I'm going to try to do is wait for Google to come back down into here. And if we end up for some reason in this area, I want to go long into next week. Okay. Now, if you want to just trade it for, real quick from a intraday perspective, then we just use the PMZ. And I'll go over that with you really quick. That yellow box there, that was the PMZ for nighttime. And now I say futures, I just want to make this correction real quick for you guys. This also can be used, that yellow box can be used for equity trades after market. Okay. But anyways, I'm going to turn that off. Let's go ahead and do that. Apply. Okay, so the PMZ here on Google today is going to be PMZ high 95 and a half, basically PMZ low 95 and 24 cents or and a quarter. The risk is 23 cents. I would at least make this 50 cents, okay? Because Google, it can be a little volatile. So I would at least increase that to 50 cents. All right. Now, what we have to do is find targets. So we could take yesterday's data and look at it, all right, and just look up and to the left. All right, and we can see if price breaks over the top of the PMZ if we go to the left. All right, see this red arrow that I have here? I'm just going to come a little bit underneath it, and this is going to be a first target. And then the second target, I just simply use my trendy edges, and a third target would be this trendy edge and so forth. And then that line in the sand, those are the targets to the upside. Now, the big thing is I don't really want to go short. I want to wait for the demand zone. That's just me, okay? I don't want to go short, all right? I want to wait for the demand zone. So what I'll be waiting on, if it cannot get going, what I really want to pay attention to here is if it takes out the low, okay? If it can't take out the low, then what I might do is actually start here. And if I'm wrong, and it comes into here, then I'll add here and my stops will be under 90.77. And what I'll be looking for is a Monday move that would get us up towards here. Okay, so this is the plan. Starters, if we can't take out the low, okay, if we take it out really quick and we get in the zone, then I'll start in here. Okay, if we push to the upside, then again, you could do an intraday trade, and these would be the targets to the upside. Your trigger long is over that level of 95, and let's just go ahead and make this 95 and a half, folks. 95 and a half. Okay. All right, so that's all I have for today. Our Tesla trade, I did a butterfly to the downside. Let's see where we are, and it's sitting perfect. We're in the money. So you should be up immediately. It's up to you what you want to do with that. Some of you actually that don't do spreads told me you just went on puts, so congratulations there. And the reason why I did this, just so that I can make it very clear to everybody, is the inside candle. Okay. Once I told you guys, hey, it's inside, that is the first clue that we're looking for, especially after a big run. Not only did we trade it to the upside yesterday and make money, but then we went short on it because of the structure. And again, I teach that on my YouTube page. You guys can go there and check that out if you still don't know how to identify the inside and down and inside and up. Okay. Anyways, again, happy Friday, guys. Thanks again for coming out last night. And good luck trading today. Let's have a good time. And we'll see you on Sunday when I drop the broad market analysis, okay? Again, I'll be at Simpler presenting 1 hour after open, so 9:30 Central. I'll leave this running so you guys can still hear me. But after that, most likely I want to end my day probably around no later than 11 Central this morning. All right? Talk to you guys soon. All right, all right. Thank you, Melissa. I appreciate it. Thanks, Melissa. I appreciate it. We'll get started here. I was also checking out the XOM that you guys ran before, and that came right down into demand at 110.88 this week and pushed right back up, kind of where it started. And honestly, I'm watching this for a break because we could see this push over the 118 level. We could see a much bigger run here long term. But CVX looks great as well. Um, Also, keep in mind from the line in the sand to the pivot high pre-market mark on there to see if you guys can find your 23 and 38%. Just kind of understand where the bull channel is of that move, and if it lines up within the PMZ, just know that. Let's go over here to ooh, Tesla's taking a dumpski right before the open. Yeah, I don't want it to go too far though. And it kind of looks like that's kind of the it's it's 205 to 200. But the implied volatility yesterday was 83%. So what is? Oh, oh yeah. Oh, did I buy? Oh my God, I bought. Oh my goodness. This is gonna drive me crazy. This is the part. This has happened two times here at Trendy, and nobody told me. This is where I need y'all's help sometimes. I bought next week. That's absolutely not what I meant to do. This is where I think somebody would pick up and say, "Hey, John, did you mean to buy a butterfly for next week?" No. The answer is no. You don't buy a butterfly that tight for 1 week out. Damn it. That's frustrating. Oh my goodness. Trying to think like, how does that happen? I think it's when you scroll up on the option sometimes and you don't realize the date. That's a bummer. Yeah. Yeah. Well, maybe I can at least get out for what I paid, but um that's a bummer. Darn it. All right, could leave it alone. Could be right back to 200 next week if it keeps dropping. It'll definitely throw off the percentages and stuff. All right, so far, price moving out of that demand zone, as you guys can see. Google taking off, headed towards the first target of 96.53. That was a nice little run from the PMZ. Hey guys, I had to sell this, unfortunately. That would have been more, probably more like 100% for this I was so excited. Oh well. Yeah, it's crazy. You see Spotify's up almost $5. They that's how they do shit. Roberto, are you on mic? I'll tell you what, man. Spotify is crazy. Really is. That's why I kept it, man. That's why I trimmed yesterday for profits and then I kept it. I'm like, I'm not selling you. It's a sneaky name. Super sneaky, man. Super, super sneaky. All right, so ES futures traders, your target's coming up for 40.85. Be careful in here. You have the edge above, but note that you do have the cloud. So if you're long and you have several, so micros or something like that, you definitely want to be trimming right around this area here. Adam, it's probably something on your end for sure. There's that 40.85. And if we come over to a 5 minute, guys, um, it started off as a negative positive. And when we have a negative positive, all right, what do we look for? We look for a run into this zone up here. Okay. Or you look for the line in the sand, but I'm trying to be careful and make it a little bit closer. So remember, we had the arrow over here. You got this wick over here. But right here is kind of that area I want to see bulls if they can actually get over this. And then I think, it's kind of crazy how all this is kind of laying out here. By the way, CVX pushed right into PMZ and almost up to the pivot high of the pre-market, that 171.97. Did you get into that already? No. Okay. XOM over the edge. Pretty sweet. Tesla, nice little bounce. Yeah, because it's mean. Yeah. Damn, spot's going nuts, man. Mm, Yeah, if you guys could, and again, thank you so much, but if you guys put those kind of questions not in main chat while especially right when we're opening, we're just trying to concentrate on the setups here. And I love the line in the sand, but oh, your Spotify expired today. Yeah, I rolled that RJR. Just made sense, man. It really looked like it was set up to do something. but the timing was the variable. And this is where I like to check my phone. So for anybody that actually rolled with me, sometimes I get confused with the math and what Thinkorswim shows on the desktop. So I like to come over to my phone and just make sure that I'm actually positive on the trade because it's easy to get confused sometimes. So what I do is I go over to my phone, pull up my positions, and then you scroll to the right and you look at PL for the year and look because this is the first time I traded it this year. So I still would like for Spotify to keep going. So I'll hold. I'll continue to hold. And there's that box right there. So we came up and smacked that on the ES. So let's kind of wait to see if the market can actually do anything here. So it kind of exploded on the open. Um, Levels were hit now. Now look for the market to digest here. And let's see. Now I can, while we sit here and wait, let me pull up Trading View. Let's go to a 5 minute. See, my line in the sand is on there. So the biggest thing is just make sure, your stuff like down here, I got ETH, ADJ, percent log, auto. Um, let's see, line in the sand, go to this, inputs, style, visibility. Like none of that should change for you. But you can do things like list bubble, and you could do the size, extra large, huge. Watch this. Boom! You can see it. It's so big, right? The banner and alerts. So I could turn on alerts, do the banner, whatever. But it looks like it's there. Maybe just, you know, uninstall it. But I think, like Melissa was saying, 3 minute, it's still on there. 30 minute, it's still on there. Oh, gotcha. Ah, gotcha. So it's on other ones, Adam? SLB 155%. Are you guys still in that? Are you still in it, Melissa? Hey, Kim, it's way down here at 168.44. That's where it should be. So did you just not look down far enough? Maybe. Yeah, maybe you don't have the right data. Make sure if you go and make sure you have the right data on there. We'll look at it later. Yeah, it definitely shouldn't be 174. Is that what he said? Yeah. I mean, it didn't even close around that area yesterday. It's weird. Damn it, Trading View. Look at that. Look at that rejection. And see how the majority of the market pulled back. So right there, any of you future traders be able to get a short off of that? That's where you want to short. Baron, I saw that you're trying to short in a demand zone. I would just wait for levels like this to try to go short off of. Let's see, Google all the way back into the PMZ. When is Google's next earnings? Let's see. February? April 25th. Yeah, so uh I had an Ashley's account. I had Nvidia shorts from early in the week and they were way under yesterday. Way under. And now they're up 40%. Yeah. hmm On Google, I really want to buy some options. I want to so the earnings, you're right, is April 25th. So I just want to basically probably buy 16 June, which is 126 days out, and kind of layer this. It's really interesting. I'm trying to fill out the market. Like, you know, it's not giving us and let me just make sure before I say this, but I feel like when I go to the daily, um, let me just see. Let me count these days up. You got 1, 2, 3 days down. Let's just say that the market kind of changes a little bit and gives us a good 6 days down, right? We're due for those. The cycles change 2 or 3 times a year. You'll get a couple randoms where, when you count up, you'll see that the market, will give you that different look sometimes. So, and yes, I don't know. I kind of like it down here, so I want to look at Google real quick. Go to a higher time frame. Let's go to the monthly because I'm going to be trading off a monthly. Could be an inside month. Okay, so you got to think about that. It's only the 10th. So if it stays inside, it means this trade, if it didn't get going, you know, could be pretty boring. I mean, I like for it to come back up here at 107 or so. So, yeah. So we can start there and starter for me. Anyways. Yeah. That's so weird. Yeah. I don't, I don't know, man. Definitely strange though. Let's get over here to ES. Oh, let me find it. Sorry. Glad you reminded me. No, it's not. Are you serious? So disappointing. Like seriously. That's what DIS stands for. Seriously. It's so crazy. Yeah. Wow. I mean, they smacked 121. Like, what's up with that? All from the trendy edge. Damn edge. So mean. Yeah, it's crazy. Together. I totally forgot to put Google Starter in here, but I'm sure everybody knows. Um, Looks like it's gonna start out kind of the same way. Baba's in the PMZ. I'm gonna take a look over here. Mm-mm. But yeah. So PayPal was up this morning, huh? Too funny. Look at that PMD. Boom. See ya. XLE looking good. What'd your CVX end up doing? It pushed right up into the pre-market high. So if you got, hmm, yeah, for sure. Oh, cold. Alexa, what's the temperature? 60. It's only gonna be 2 degrees higher. What? What's your temperatures down there right now, Melissa? No, don't worry about it. I was just curious. What? 20 degrees difference, man. Wow. Yeah, and I'm always told that, like, yeah, a lot of people are like, yeah, I can't be up north because I came to Florida to be in the warm weather year round. I'm like, oh wow, yeah. I mean, the Keys was super hot. I was like, whoa. Yeah, yeah, it's messed up. I think he was DC way before that, though. think that's yeah, I think that's actually his name. It is. He just actually moved from Florida to DC. Yeah. Did you ever find out if your wife knew Omer, DC? You're in Venice. We have somebody else that's in Italy, Victor, right? Kind of close. Oh. Yeah. Oh. Uh, yeah. Okay. Hmm. Tesla straight down. Hmm. Oh yeah, I mean that was oh my goodness. That would that would be crazy. Nice little healthy pullback. I mean, if they wanted to get like a deep pullback today, I would actually try to take a little scalp trade down here at 191. That's kind of far down there, but or yeah, or maybe like 192 and a half. But we do have a double inside and up down here at 174, so could always try that. Tesla 174 for next week. 175. 65. Getting close to the demand zone though. Leave it alone. XLV. Want to take a look there. Mm. I mean, it's right at the YE mid. It looks like it's gonna be choppy for a while. Yeah. Hmm. But I mean, this is a great place for like equity, in my opinion, for like an intraday trade. And if it starts to take off, that's great. Using the YE mid as your stop, which is only about a dollar of risk. So. So my actual price on Google is 434. It's kind of interesting that the API put 4.4, but I'm sure it's something weird that I don't understand. Man, gold's a creeper. Just kind of doesn't do a whole lot, does it? Super patient, yeah. It's a good thing I bought 200 days. Um, UNH came down to support. I kind of missed it. I should have bought it down here at 463. Consider it's up about 30 bucks from. I went over this chart when I was talking to you, Melissa, but this was an inside and up that just keeps working. But I mean, bigger picture, it's just been on fire for so long. I can't help but to want to short this thing, man. I just feel like it's time. Just yeah, just shorting, looking for 436, but I mean, in reality, this thing looks a lot better at 354. And and I mean, you can't be too biased to the upside because I feel like a lot of things like got hit so hard, and that's what I mean. If the market were to ever pull back this year, like significantly, I think stocks like this get hit. We've already crushed so many other names, but there's still entire sectors that have not been hit. So, hmm 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 XLK just hit the trendy mid and came into supply. It's above the monthly cloud. I think it digests here, but yeah. I mean, XLK, 153 for this year to 160 is definitely possible as long as we could stay. Yeah. I think we're just kind of at that spot where, the market needs to digest, and this is where, like I said, I feel like a lot of opinions, well, not opinion, I mean, we all have opinions, right? But just where a lot of speculation is going to come in because I don't know, for like a year, it's just been talk, right? It seems to be like the new norm that we just, we think when we think pullback, we think crash lately. And I really think that the word inflation, it's almost like the enemy, not the enemy, but that's the word for this year and last year. So, right, in recession, exactly. So it used to be North Korea, it was Trump, it was this. There's always the word. Yeah. There's always something. SPY. Yeah, I mean, it just is caught up at the lower edge. So, like I said this morning, guys, on ES and so forth, um, it's just a different look today. We're underneath edges, so we just have a bunch of resistance above us. All right, I'm gonna turn this air conditioner off and heat up my coffee. I'm freezing. I'll be back. Hey, good morning, everybody. Good morning. Happy Friday. If we could just get a mic check. Hopefully, you guys are having a good morning so far. All right, good deal. Thank you, Mirza. I appreciate it. Let's go ahead and get started. Good morning, Srini. Good morning, everybody. Hopefully, you guys are having a great week. Happy Friday once again. I am hanging out. It is cold to me. I'm in Florida. It's 62 degrees this morning, and I'm watching the water. And I'm just loving life. It's Friday. I'm here with you guys. We woke up. What an amazing day. I want to go over the ES futures like I always do. It's going to be the same thing every time you guys watch me. I am going to do the same exact thing. I like to be very consistent with my process, and then we'll go into the Google trade. We'll talk about yesterday, why I executed that trade, why it worked out, why I'm rolling into options, and kind of my idea behind that. Okay. And then from there, we'll do some scans. It's Friday, so possibly some intraday trades here if we can get some sort of trend going. And then from there, I'll take some requests if you guys have any charts that you would like me to take a look at. So let's go ahead and get started with the ES futures. Once again, we'll start with the weekly. Let me change this really quick. We were looking at the monthly this morning. And how are you guys doing? Anybody take any trades yet? Any of you guys in any trades? How are you doing on this beautiful Friday morning? I started with, hey, what's up, Jag? That's awesome. A man with many names, right? My actual name's John. I don't know if you guys know that or not. It's not actually trendy. Like, my mom didn't name me trendy. Got to keep them guessing. That's right. All right, so really quick, so we have an inside week, okay? So remember, this is setting me up for next week, and I absolutely love inside candles, okay? She would be a trendy mom, that's right. So look, next week, what I'll be looking for is long. Let's go ahead and zoom in. So here on the ES futures, we have a body, okay? The current candle is inside, and what I'm looking for is that institutional, what I would call the institutional formation, okay? And these things are money. What I'll be looking for next week is whether or not we can go inside and up and finally hit this supply zone that I've been waiting for so patiently, as far as a bull look on a higher time frame, or perhaps we create an inside and down and just basically resort back to the EMA cloud here. Okay, so right now, just understand we are in a neutral kind of position. We stayed the part, right, of being very patient and waiting for this demand zone. Now, I've been going over this demand zone for quite some time with you guys. I was very patient. Matter of fact, 2 weeks for this to kind of play out. Notice that price came in here. Notice that price bounced. Okay, this is what demand's all about. And again, we found this formation by looking at time frames and looking for structure. So the first structure that you see here, this is 1, 2, 3, 4, 5 candles inside. So when we zoom in, let me go ahead and show you. Okay, when we zoom in, this candle right here is the mother candle. Okay. These guys right here are all inside. All right. All inside. And remember, this is trendy methodology. So what I mean by that, when I say inside, all of these candles close within the body of this candle. And then we have this explosive move to the upside. Okay. This is called imbalance in the market. And if you know anything about orders or being on the floor, there's an imbalance in those buys and sells, right? So price shoots up very, very quickly. And what happens is that retail grabs on, and on a higher time frame, somewhere over here, we hit supply. Okay. A lot of retail are not ready for that. Matter of fact, most traders start to get long in here. We're already ready to be careful in this area, and we're looking to be careful with our portfolios. Then we have to look down, okay, down and to the left and find this spot. And what we do is we stay patient for that move back into that imbalance area or that demand zone, okay? That's what we're looking for. Now, it took 2 weeks. Remember, timing is the variable. During this process, notice that we made lower highs. Everybody understand that? And we were making, at some point, we were making higher lows, and really we are still making higher lows. When you have lower highs and you have higher lows, you create a choppy environment. Okay? Pretty straightforward. All right? Now, just a few minutes ago, I went ahead and posted this chart in main chat, and I let you guys know that demand is working. Okay? Matter of fact, the Google trade that I took yesterday on equity, I didn't even look at the Google chart. And that's what I mean when I say that the ES runs my portfolio. I looked at it beforehand. I knew it was pulling back. I was looking for the levels where I wanted to get long. But what I understood is when the market pulled back into demand, that the rest of the market would basically run with it. So Google is coming back into a zone. ES came, very close to its zone, by the way, very close, right here. Okay. And because it came back into this level and we did not make a new low, I started my Google trade. And then Google pushed up from there. And we'll go over Google here in a minute. Now, this resistance level, why am I using this resistance level? Again, I teach this through my Fibonacci, and basically I'm using one of these pivots to the upside, and then I'm using the pivot low down here, and then I'm finding what I call a bear channel, and then I look up and to the left, and you can also see that this bear channel is also confluent with my trendy edges and the trendy cloud, okay? This cloud right here is resistance when it's above price, and it is support when it's below price, okay? Everybody understand that? So this is how we find our targets. Matter of fact, we go long inside the zones, and then we look to trim at targets to the upside. Does anybody have any questions about this blueprint before I move on? Okay. Anybody have any questions about this blueprint? We're good? All right. How do you identify the supply and demand zones on the chart you just sent out? So, Dogbird, are you talking about for I apologize, on this ES that I'm looking at right here, Dogbird? Okay, cool. Yeah, so let's go ahead. So the demand zone, I just kind of showed that. This is an inside and up formation. Okay. So I identified that. Now I'll tell you a lot of like traditional supply and demand traders, what they would do is come over here and use the wicks. Okay. And I often use the wicks, but when we have multiple inside candles, this is a little bit more advanced. I tend to go with my edge here. Remember the edges, folks, if anyone doesn't know, the edges are a playing field of supply and demand. That's all it is. It's just a playing field. So it doesn't have to be perfect. What I learned about supply and demand trading is if you try to be too perfect, it can really, really mess you up. Believe it or not, when you have this idea that you are going to make money every time you take a trade and that you have to execute right at that level and it doesn't work out, it feels like 10 times worse than just taking a loss when you're just trying to get a playing field. So try not to be too hard on yourself is my point. All right. So the trendy edges are a playing field, and then we have a way of trading off of that. So in this case, Dogbird, what I did is I identified the zone by looking at structure, but then I just simply used the trendy edges below. So we have a trendy edge here, and I have a trendy edge here. I drew a line from here, and I drew a line here, both of these encompassing this zone here. Okay. All right. John, were you, or can we get the so that's not a Ichimoto cloud indicator, Phil. This is a trendy EMA cloud indicator. So the cloud itself is made up of EMAs, exponential moving averages, 9, 13, 22, and a 44, but it's a lot more robust than that. It changes colors with crossovers. It gives buy and sell signals for me, that type of stuff. Okay. Now, notice really quick when we zoom in here that see how close we just got to the cloud? Everybody see that? Everybody see that? So if you're long, this is where I teach, this is where you want to be careful. Everybody understand that. This is resistance. You know what's crazy is that the majority of traders are just starting to feel euphoric to the upside when price is coming into supply or resistance. Isn't that crazy? But from my standpoint, I actually get to see this a lot. And I learn a lot by watching a lot of people. And it's pretty neat because we do have the edge. We want to get long where most people are fearful, and we want to be trimming and getting out of our positions where most people are starting to get euphoric. So you really have to kind of change your mindset when looking at supply and demand. All right. Let's move on. So, let's see, Tree Jones. So, when is in the demand zone? Are you waiting for another inside and up structure before you go long? DP, no, I'm not waiting for another inside and up formation. Okay, really quick, guys. So, I'll show you one more time here, and I'll probably show you a million other times. But this is the demand zone. Okay, and price comes down into this zone. Okay, what I like to do, it just depends on my mood, to be quite honest with you. What I like to do is if I'm really convicted on this demand zone and it is never tested and it's a fresh zone, all I do is look at the histogram down here on the TTM Squeeze Pro. And basically what you're going to see on a smaller time frame, so I switch over to the 5 minute, is you're going to see red bars, right? And right when it comes into demand, you'll start to see some buyers show up. And then you'll get these yellow bars down here to let you know that the selling pressure has decreased. Okay. And what I've taught in here is to wait for about 2 yellow bars. And then you're looking to take that trade to the upside. Now, my only caution with that, and again, I don't want to put too much detail on this lesson right now, but my only caution is if you get 2 yellow bars and the cloud is right above price, then I still wouldn't take that trade because that cloud is resistance until proven otherwise. Okay. Everybody understand that? So again, you can see here, my go-to for this week has been the 4 hour because of the imbalance, and I knew that this is where I wanted price to come into. All right. Now understand that sentiment is not great right now. And if sentiment is not great, then you're going to have to be patient and wait for things to kind of line up. Remember, up here, I just want to make sure I make this clear. You see this box? Remember, I have a video on YouTube. It teaches you how to create this time frame type of chart in Thinkorswim so that you can scroll through these very quickly. Okay, this is a must. All right, even if you don't trade supply and demand, you should have something like this on your Thinkorswim. Okay, what I'll tell you is that each time I click, I have a different mindset. Seriously. So here, I'm super patient. I understand that it's weekly. I am not looking at this chart primarily until the end of the week. I want to see that it can close inside. Okay. When I switch over to the daily and I take a look here, then I'm looking at, the same levels, but I'm also counting the number of days down. It is very normal for the market to move anywhere from 1 to 3 days down and 1 to 3 days up. That's 1, 2, 3. We're on our third leg down. We're getting close to demand. Well, we already got to demand in the 4 hour, and guess what? We're starting to bounce a little bit. Everybody get that? And then when we move over to a 4 hour, there's your proof of concept. I showed you the demand zone over the weekend. I showed it to you guys in here several days ago. And now that you can see that price is moving up, that is my proof of concept. As I said before, always judge me on the blueprints that I'm showing you guys. We do have a high win rate, but I mean, winning it's cool or whatever, but educating and getting you guys in the right mindset, I think is most important in the beginning of your trading. Okay. Coming over to a 5 minute chart, this is the PMZ. You guys know all about the PMZ. This is the pre-market zone. This is our favorite indicator. Most people love this thing. Basically, it's very mechanical approach. Go long over it, go short below it. The risk is up here. This morning, for our intraday traders, people who are just trading to the upside to hit this line in the sand and this trendy edge, this was resistance, okay? It's confluent with the 4 hour cloud, but also any level that I have to the upside on my chart is resistance until proven otherwise. Notice that price moved from here into the line in the sand and a trendy edge, and therefore it is resistance until proven otherwise. For you guys wondering what the market's doing right now, let's go ahead and measure from this pivot low into the pivot high. We want to identify the Fibonacci's of 38.2 and 23.6. We can see that we're below the 23.6 and coming down into what I consider the bull channel. Okay, I would expect buyers to show up here. So we just identified that by clicking there. And then I'm going to identify the 618. The 618 is a golden Fibonacci level. And basically what it tells me, folks, is that this trend that I just measured is broken if we break below 40.75. Does everybody understand that? Okay. Okay. So again, we can already see that the 23.6, okay, that buyers came in already. So in this area, we can see that the bull channel is working so far. Again, a break of this, I would expect prices to come into 82 and 75. All right. And then if we break 75, we have a high probability of 68. And of course, we'd be then testing the pre-market lows. Okay. So far, though, again, I have to resort back to I believe strongly that today will close inside of this body. So just close your eyes for a minute and think about what I'm saying. I just showed you 4 different scenarios on this chart. I tend to rely on my higher time frame charts because what I found is early in my trading, and I say early, for many, many years, I had a lot of stress. And it's because I was concentrating too much on the smaller time frames. So I found myself like kind of like this Google trade, right? I bought a lot of time. It's actually past the next earnings, all right? And I did that on purpose because my whole idea is that I can be wrong here and I'd rather scale in instead of getting up in arms about being right immediately, okay? Now that doesn't mean that we don't trade intraday. I love trading intraday, all right? But it's a Friday and it's a choppy market. So premium is a big thing. And if I was a market maker and I was trying to take your money, the whole idea here is to give you a little bit of taste of something and then quickly pull it back and go sideways and kill your premium. Great for credit spreads. Okay. Great for credit spreads. But today is not really the day I would be looking for a big trending market. Today is the day where we look back and go, shoot, we're just at an inside week. It's very choppy. Okay. Chaz, you're following the TNX, so the Treasury. Yeah, I think that's let's bring this up. So I'm gonna bring over the right here. All right, and I'm going to show you the Treasury, and we'll go over Google here in a second. All right, so this is the TNX, and what we use, what I've been using for many, many months, is the monthly, and I have a blueprint on this. So I don't know if you've seen my TNX blueprint. It's worked really, really well. It's really helped us drive into the market. And a matter of fact, before I dive into TNX, let me do something with you guys just really quick. Let's pull this up, okay, here in a second. All right. So let's first go over Google because I want to talk about Google just in case anybody, wants to know. All right. So understand that Google, it still hasn't come into my demand zone. Okay. I just want to make that very clear. It has not come into my demand zone as of right now. Okay. So there is a possibility it can still come in here. This is the reason why I'm starting the position. Another thing that I like to do, and I don't want to confuse anybody here at Simpler, is that for long-term positions, I can and I do this for earnings as well, is I can hedge this trade with put debit spreads. So if this is a demand zone and it wasn't tested, I can buy put debit spreads to here. And what I basically try to do is structure them so when price does come back to here, okay, and I wasn't patient enough, these pay for my long term. Okay. So I won't go into a big thing about that, but this is the overall blueprint that I'm looking at. We did not come into this level. We do have a gap fill down here. There is a probability that we could still come back to here and test at 93. Okay. So I bought a little bit of time, and the idea is to scale into the position. This is what I did with Tesla back in November, and my position was up 1,200% yesterday. Okay. Now, that doesn't mean that I'll make 1200% on Google, folks. So please, please understand that. Each trade is, is its own. It'll do whatever it needs to do. But you can see we're underneath the cloud. We're not quite in demand. So please know that I'm looking at a higher time frame and I bought a DTE, basically days till expiration, and this does not expire until 126 days from now. My overall mentality, I guess you would, my mind frame for this is just longer term. Okay. Longer term. All right. But let's go in because I think that's a great, I think this is a great time actually on a Friday to discuss. And I did this, I think I was with you guys last Friday, but I want to discuss with you what I do every weekend. And this really helps me get a pulse on the market, folks. And I really do highly recommend it to you, not only to look at these things as well, but they really can help you. Okay. So the first thing that I do is I always look at what's coming up on earnings. And then I go to Market Watch, right? And I take a look at Market Watch and I want to see what kind of econ data is coming out just to understand where volatility can happen. Okay. Then I dive into the SPY, okay, on a quarterly. All right. I'm always interested in the bigger picture. This is my quarterly that I sent out every single weekend to my folks, right? And basically, what I want you to see is that I take the same methodology, but I apply it to a bigger time frame. Okay. So instead of me being up in arms and scared and spreading opinions around, I just want to look at technicals. Okay. And the technicals say right now on the SPY from a quarterly standpoint that we're above the cloud, we're back in the bullish zone. And what I did was I measured from 2020 into the highs of 2022. This is your 23 and 38%. What I do know is that when the market can hold the 38%, it is bullish, and the market has been bullish. It is choppy now, but it's time for it to digest. The quarterly supply, folks, is $446. There's still room for movement into 424 and 446 as long as the 38.2 holds, which is 390 and a quarter. The next thing that I always go over is going to be the QQQ. Same thing, quarterly. Okay. Notice this one's a little bit different. It's been lagging compared to the SPY this year. Notice that we are above the cloud. That is bullish. Notice that the quarterly still has some time until it closes 1 month and 22 days from now. If we can close above the cloud, I like tech to move further into the supply zone. The IAD stands for inside and down, and that it can continue to move up towards 319 and up towards the back of the box at 336, as long as if this and that, if the quarterly can close over the monthly. Again, we still have 1 month, 22 days. The next thing that I look at is going to be the dollar, the DXY. This is huge for me. We called this drop from the very beginning, okay? And then we called it the bounce, and this was months and months ago. All I had to do was see that we were getting a topping wick. Once we went inside, we expected the dollar to fall into the demand zone. This is the same blueprint that I pushed out probably back in, I don't know, you can see right here around June, July timeframe, okay? We've been following this blueprint, and it's really helped us be on the right side of the trade. Understand that this said inside and up. If price hits here, I expect a bounce and for the market to turn down. The dollar did come into this zone. We raised yellow flags because I'm a lifeguard when it comes to the stock market and said, hey, listen, if you're going to go out into the water, you might want a flotation device. Be careful. Price then pushed up in the dollar and the market started to pull back a little bit. Okay. This is what's going on. Now, this double set that you're seeing here on the Fibonacci side, this is important. This is what we call the bear channel of this move. Notice that it stopped right there. This is actually where I'd expect the market to get a little choppy and perhaps bullish if the dollar breaks back down from the 23.6 and comes back into the inside and up. I believe the market then turns, right? We're on our third day down right now. And then we could see 1 to 3 days to the upside. Okay. That's the idea right now. So your dollar, what I would do is be setting an alert over 104. If it starts to get 104 and then can break 104 and a half, I would be cautious as the dollar looks pretty strong. Right now, what I am anticipating is that the monthly okay? If it stays under 104, okay, that it closes inside of this guy. But what is worrisome is that you have the inside and down, which is supply, and possibly this inside and up holds in here. And now you have a range for the dollar to move back into supply. And typically when the dollar is moving to the upside, then the market is pulling back. Therefore, I have a yellow flag that I'm still waving. Therefore, I'm starting positions and not fully allocated to the long side. Okay? Everybody understand that? The next thing that I want to be looking at is the TNX or the Treasury. Now, I don't put a lot of emphasis on this, but what I will tell you is that we as well call this move back down from the Treasuries. I've said this since the middle of last year. Possible capitulation event happens over 4.5. That's just my opinion. Okay. And I also said on this topping wick and inside candle that we were looking for the price to pull back into the monthly cloud and then look for the TNX to bounce. This is no different than any equity that I teach you. If price comes down into the cloud, we look for things to bounce. Just happens to be the Treasury. The Treasury is bouncing from the cloud. And then from here, we could also take some Fibonacci's. We could come from the pivot high. Actually, I'm going to use this pivot high. And let's go right here. Come down to the pivot low. And you can see here the bearish channel. I'm not too concerned unless the Treasury starts to bid over, and I'm going to use the 618 in this case at 3.9. Okay, so I would set an alert around 3.9, but it is doing exactly what I expected it to do, and the market also is being super choppy to down. We expected this just by looking at these charts. The next thing that I look at that's really, really important is going to be the skew. These are your hedge funds. I actually learned this from John Carter years ago. I just kind of tweaked it and did a couple things on my own. And I got these numbers up here where I say risk on, and up here is risk off. Okay. The market came into this red line here. What I noted over a period of time since the inception, and we need to go to a weekly, since the inception of the skew, I noticed that every time we came to the red line that the market bounced big time. And I actually said this months ago. Moves under here are extreme and the market typically snaps back on an extreme bounce. If you were to put the SPY in the background here, you would see that when the skew comes down to these levels, that the market is extremely fearful. The max participants are on the put side and all they can see is doom and gloom. But this is where big money hides. When all these things kind of marry up, you can see that the big money is accumulating and retail, you and I, are scared and getting out of things. And then they're not prepared for January because they're not looking at all these technicals that I'm sharing with you. Well, in this case, we were looking at the technicals and we've done really well in January. Okay. Now, notice that the skew has pushed up into the cloud. I understand that this is not a stock, but what I want you to take note of is that it hit the cloud and now it's rejecting. Therefore, the market was kind of pulling back. It's just super choppy, guys. But the last two times that we've come into this red line around 112, the market has popped so extremely hard. The next thing that I look at is going to be the fear and greed. I do this every Sunday, every single one of these charts with action plans. The fear and greed here, if you notice, folks, is in greed. It had ticked over just a little bit right into the extreme greed. And this was the first time this happened in a very long time. Now, what does this tell you when you look at everything I just showed you? The SPY and the QQQ are very close to their supply zones. So we knew that the market was going to pull back a little bit. The dollar was coming into demand. We knew that the dollar would then push up. The TNX was coming into the EMA cloud. We were looking for a bounce in the treasuries. Therefore, this has ticked to the left side into greed. Okay. We also know when this is on extreme greed that the max participants, I shouldn't say max, the majority of participants are on the call side. When everybody's on the call side and everything's in supply, what do? We pull the rug. You have to be prepared for this stuff and you have to be able to read the market to understand what's coming next. And I do this every weekend to make sure that we're prepared for the right side of the trade. We can't guarantee it, but what I can tell you is that I've been doing this for many, many years, and just this analysis alone will help us big time. Okay. It's really worked really well. That is what I look at when looking at the treasuries, the skew, all of this stuff. It's so important to me. Okay. Now let's talk about the right mindset. Can you, are you a swing trader? Most traders think they want to be swing traders, but what I've noticed being a coach and doing what I do is that the majority of traders are looking for results within 5 minutes, right? Even the guys that will buy, 2 months out, oh man, it's coming down, right? So what I found is my approach like Google. How can you approach a trade and be at ease? The first thing is allocation, understanding your allocation. Where are you with your allocation? I ask everybody to find a number that you're comfortable with. When I say comfortable with, I want to know how much you can lose. And this is the same thing that I tell my members. What is the number that you are willing to lose every time you take a trade? And once you find that number, I want you to cut that number in half. Okay? Because the majority of traders say a number, but really when it comes down to it, they're not comfortable. And the other thing is they talk themselves into multiple trades. They're like, well, I'm okay with $500 loss a trade. And they have 10 trades on. They wake up the next day, the market dumps, say they're net long. And now 10 trades, 500 bucks, they're down about 4 grand or so. And that's not what they were expecting. Okay. So always think in terms of when you are trading during the day, that's the only time you can really manage a trade. Okay. So whatever you go home with and you go to bed with, you can wake up the next day and that amount of money can be gone. So I understand that trading Google, all right, and buying 122 days out, I understand that the allocation, the starter position that I put on is a comfortable amount. If I were to wake up tomorrow and Google were to crash to the downside another 20%, I would be okay. Okay. Intraday trading is a little bit different. Allocation can be, for example, let's say you're okay with $500 loss. I can still take a $2,000 trade, okay, and have a $500 limit that I'm willing to lose. There's a big difference. But if I take the 2000 home at night, I can wake up tomorrow and the 2000 can be gone. So when you're swing trading, I need you to take those kind of things into consideration. Okay? All right? Does everybody understand that? So if you're, I mean, really like let that sink in because I can tell you as a young trader, when I started, I didn't think about that stuff, folks. The only thing that I thought about was dollar signs. I put a trade on, I copied people's trades, and all I could see was money. It wasn't until years later after losing, okay, over and over and over, right? I had some great wins, but I also lost a lot. All right. It wasn't until then that you kind of wise up, you kind of hit rock bottom, and then you realize, hey, what I'm doing is not working. And sure, the technicals help a lot, but what I can tell you is this is like giving you the keys, and I shouldn't even say the keys. This is like giving you an airplane and you've never flown a plane. It doesn't mean you can fly it. Okay? It really doesn't. So indicators, all these great things that I'm teaching you, they're great. They work. They have higher probabilities of working out. But I can still hand you these and you can still mess it up. That's the reality of trading. We can have the most beautiful blueprints and still at the end of the day completely trade them backwards because our mind is something that it's just different than what the chart is. The best way that I found to trade these setups is to execute them. You cannot hesitate. If price comes down into a level, you take the trade like we did on Tesla yesterday. Okay. I also shorted Tesla yesterday, and I'll show you that here in a second. I messed up. I probably could have made like 100, 200% this morning, and I accidentally bought next week's butterfly, which really threw me off this morning. I was really bummed, and I didn't realize until 5 minutes before the open. I was really bummed about that, but I want to go over that with you too. But the whole idea, okay, is that you are comfortable with what you're willing to lose. Stop thinking that every time you take a trade, you're going to make money. Because the truth of the matter is, this is the only business where we can wake up in the morning and lose money doing this job. I always tell my friends that they think it's a great thing. And I said, do you go to work and lose money? No, right? This is one of the only jobs where that can happen if you do this as a career. Okay. So start to think a little bit differently and it will make you more comfortable. Okay. So for me, comfort lies somewhere between a number. and everybody is different. I hear some people say, "Hey, I'm going to use X amount of my portfolio for trading versus long term." Okay? Right? So I got people out there that are like, "Hey John, what are you doing with the other 90% of your account?" And I think that's a great thing. So if you're day trading and you have all this capital kind of sitting out there, you know, that's one thing. But for day trading, you got to come up with what you're willing to hold on to, okay? And what you're willing to lose at night. I think I hit that enough. All right. Now let's go ahead and move on. So again, higher time frames are what I'm interested in because what that's going to do, it's really going to reduce your stress. Let's come over here to the ES futures, and I always, matter of fact, let's talk about something else. Let's go to the Nasdaq. Okay, let's go to the Nasdaq futures. All right, because I do this, so I cover ES futures and Nasdaq futures. So here's the NQ. This was the zone that I was waiting for this morning. Notice that these zones look a lot like the ES, right? You see that? However, we didn't quite hit this zone yet, but we are pushing up into the cloud. Notice that the NASDAQ actually pushed into the trendy edge. See, this trendy edge was support, okay, at one point, right? And then we got a nice little bounce play, and then it broke down, and now that support turns into resistance, okay? That's what people are used to saying, correct? So these levels, they work really, really well. If I were to come over into the 5 minute, if you traded the PMZ this morning, notice that the PMZ right here, your risk was 14 and a half. And your reward was the trendy edge. You guys can see that. It worked really, really well. Okay. All right. So, and it continues to work well. I get a lot of questions. Hey, John, can I trade the PMZ on the Dow Jones? Can I trade it on bonds? You can trade the PMZ almost on every single instrument. All right. The only time that the PMZ doesn't show up on the charts is when something's illiquid in the pre-market. It's based off of pre-market data. Therefore, if you have something like, I'm trying to think, sometimes like John Deere may not have a lot of pre-market action. And so you may not get a PMZ there, if that makes any sense. Yeah, yeah, Krishna, years later, not days later. Yep. Dubbird, John, does a complete penetration through your cloud equal a momentous move in a given direction? So yes. So for example, are you a futures trader, Dogbird? Okay. So regardless, right? A chart is a chart to me. And so when you're looking at this, it's important. Like I'm going to give you two different looks. Okay. Remember, it's all mindset. Where are you on a 5 minute versus a weekly cloud? They're going to be completely different. Okay. So yes, I do believe that. So if we zoom in here, this is your cloud. Okay. And notice that once we get above that cloud, the bottom of that cloud is support, and then we get a big move. So for a futures trader, you look at this is a big move, right? You can make a lot of money from this particular trade from that move from the cloud. Okay. John, I'm long DE stock rebounding today. That's a great question. I'll show you that here in a second. Can I look at Snap? I definitely can. Matter of fact, I thought Snap was after its big sell-off, was kind of a big deal because it was coming down into demand, and I'll show you that here in a second. So, Dogbird, I mean, really quick, yes, it is resistance until proven otherwise. When it's under, okay, when it's under it, you look to short the cloud from underneath, okay? All right. So here we are on Snap. So you asked about Snap. First things I need you to understand, this is weekly. 1, 2, 3, 4, 5, 6, 7 weeks up, folks. If you weren't buying in demand, okay, and sorry, let me see who was asking me that. I apologize. Karen. Karen, if you notice on this chart, okay, we came into demand and I found this zone for our members over here. Um, Let's go to a monthly. I think it's either a monthly or a quarterly. So I want to show that to you really quickly. Okay. No, phone's dead. This is your inside and up. Let me zoom in. This is your monthly. Check that out. You also have a lot of edges down here, so this lets me know this is a good place to buy. So, the news or whatever, the catalyst was something that pushed price into demand. So from Snap standpoint for me, also notice that the edge was resistance. Do you see that, Karen? Okay. So for me, this is kind of a sit still. So if you're not in it and you didn't buy down at demand and you knew nothing about demand, I mean, did you miss a big move? Yes, from 736 all the way in 1186. That's a really big move. From this standpoint, what I would do is I would take, all the stuff that I teach you. I would just take the last 2 months and I would measure here, and I would not get long unless it can get back above the bull zone. Okay. And I would not get long if it breaks below the 618. I actually did a small webinar last night about my neutral strategy. And basically, what I'm doing here is using my methodology and creating two zones, or sorry, two levels, and calling this neutral, because what we understand in this is that price is not in the bull zone, and it's also not broken the last 2 months of its run. But it's not important for me to kind of speculate here. I'd much rather see a break above or a break below. Does that make sense? This keeps me from making, for me, guys, and this comment is made for myself. This keeps me from making stupid decisions. Okay, I care not to try to make a decision in a neutral zone. It just doesn't make sense. Okay, no problem. You're welcome. All right, so let's see here. I looked at Snap when I read his initial post. I'm not sure what that was. John, I'm long DE. Yeah, let's go over here. I love doing this type of stuff, folks. Um, let's look at the monthly because DE's been down quite a bit, and I absolutely love the idea. Looky here, right? We actually, I created this zone a while back. This is where I wanted to buy, and this is what I mean. So if you guys are sitting at home, you learn this type of stuff, you find these zones, make sure you create alerts so you don't miss big moves. Okay, so where I wanted to buy DE was at 403, right? And you can see that it worked. All right. If we go back and now go into a weekly, let's see what we have here. There you go. Do you guys see this on my indicator? So this is actually part of the cloud. That's why I say the cloud. A lot of people, you can find an EMA cloud out there probably for free, but it's definitely not robust like this cloud. This is letting me know that we have demand in here. And so I just automatically look to the left, and that's how I came up with this level. Okay, so it did come into the level, it bounced, and so far as targets to the upside, you are in a weekly cloud. You're going to have to break above that cloud. We just talked about that, and then targets to the upside after that are 424. Then I would use a trendy edge at 429, 434, 444. Now for me, it's a if this then that. Price has to hold 408. 408 in order for this to happen. I do believe that when we're in the cloud and we're at the top of the cloud, we tend to digest. And if you zoom in here, see what I mean by that? See what I mean? We digest. So, bigger picture, if you're a swing trader, committing to the bigger candles is what helps you stay in these type of trades. I can't take a swing and look at a 5 minute chart. It just doesn't make sense to me, or even a 30-minute chart. Okay. New to this trade, can you share your chart setup? I cannot share my chart setup. Guys, I've been selling my indicators for like 6 years, so they're not free. I apologize. Mike Trinity John, what is your EMA cloud criteria? 9132244, but there's a lot of code behind it to do all kinds of other cool stuff. We do day trade. Yep, we definitely day trade. Um, I get that question sometimes. Yep, yep. Definitely day trade. Yeah. So, that's actually a question I'd like to answer for anybody that's new in here. I think this is important because, again, I've been doing this a while and we get all kinds of different questions like, hey, John, you know, what type of trades do you take? And I think this is important for people to understand whether you've been around the market for a long time or you're not. There are, and I go into this, there are two basically different trends. You guys get that? You either trend to the upside or downside, right? Or you trend sideways. So this is trendy, this is trendy, this is not, right? Trending up, trending down, trending sideways. So think about this. If we are trending to the upside, I like swing trades. I like momentum trades on the day. If we're trading to the downside, same thing. If we're trading sideways, I basically slow way down. Okay, for me, I found that at least, far as like from my perspective, for my members, it's a small percentage of people who actually sell credit. We sell credit sometimes, but not as much as a lot of other people do. Okay, so when we're sideways, I kind of lay off the gas pedal, if you will, and we wait patiently for price to come down into demand or supply. Okay, so that's kind of what's going on there. So sideways trend. Now let's really quickly go over. Let's see if I have any PMZ signals. So this is my scanner over here. I want to see if I can get perhaps some sort of trade going. This is AMD, and this would be an intraday setup. So remember, I use the PMZ for intraday setups. Notice that this is a weekly inside candle. Okay, this is setting up, folks. I really love this. It was super bullish. We have a supply zone up here. Okay, supply zone up here, and I'm just going to use my edge and that structure there. Okay. And right now, price broke out of that cloud. So you asked about the cloud and if you got that momentous move, right? Well, you did. See how much it pushed up and it pushed up into the sell signal over here? Well, now it's just digesting. And what's really cool about this, if you look closely, look how it came right back to the cloud for support. Isn't that cool? I think that's cool. So right now, for me, this I definitely have my eyes on. This is either going to go inside and down, okay? And if it goes inside and down, we could be identifying this inside and up here. And price could be coming back down into 78, 75. If it breaks to the upside and we go inside and up, we'll be looking for 86 and 89 again. And if it can break through this pivot high, then I like 94 to 100. We actually covered AMD not too long ago. And what I'll tell you is that for AMD specifically, I like it, but it's a doozy around round numbers. If you guys go back to I think 2 years ago, when we were getting close to 100, they really sold off hard. And then we want to be paying attention to SMH. Where is SMH going? Right? It's down $4 today. I still think it's bullish. I could care less. You got to start thinking differently. If something's bullish on a red day, you should actually be excited. Okay. So I teach you how to find these levels, right? You should be excited. You should be asking yourself, is price coming back to a level? Here you can see that price did come back to a level and it's bounced so far about $3. Now, I don't know if that happened today or if it happened yesterday. Let's go ahead and take a look real quick. So here's the 4 hour. It happened today. Okay. So this is a great representation of our levels. We just wait for the levels. And one thing that I've learned again over the years, and we really started to dial into, is don't trade something unless it comes back to a level. Okay. Notice that this level here says to stay short. This level right here says we're popping. The cloud says, hey, yeah, we're popping, but we're not supposed to pop that much because we're underneath resistance. Does that make sense to you guys? Yeah, so Megan, so again, this little thing up here, this allows me to look at everything. And these banners that are on my chart, I don't have to go back and look at it because this is my Fibonacci all in one chart. So it doesn't matter what time frame I'm on. I already know according to my Fibonacci what the trend is on all those major time frames. Does that make sense, Megan? And so, Tom, I know you didn't ask me that specifically, but this is the kind of stuff that I love to do. Okay. So, lift, right? Instead of speculating, let's look at the technicals. Okay. This is really cool because they had such a big sell off. Okay. So, we're going to go to a high time frame. All right. So, the inside and up formation, matter of fact, Melissa, who trades with me, she found this zone yesterday and it was perfect. She was so happy. So she had found this zone before earnings, and that is your inside and up formation. So from a technical standpoint, instead of me wondering like what's going to happen to the company, what I do know is that we are inside a demand zone. Okay. And I also know that this is a 35% decrease from yesterday's price. And I look at this as an opportunity. I really do. And it's getting really close to the bottom of the zone. So what I would do here is I use a Fibonacci extension. I'm going to go from that pivot high into the bottom of my zone, and I'm going to double click. And what I understand is 757 would basically be, for me, a stop. So if I wanted to take this trade, you got to understand sentiment is horrible right now. With a sell off like this, so you want to give it a couple days, a couple weeks. But in here, I would not be surprised if they start accumulating. Okay, and I'll throw that out there. I really do feel like this area right here could accumulate. And therefore 749 would be a stop for me from a long-term perspective. Then I just turn around and I want you guys to see something. This is hard. We make a lot of believers out of this methodology. We really do, because I will show you where price will stop before price gets there. I will show you where price turns around before price gets there. I do this over and over and over, and it really is easy. Okay, it's not magic. Look up and to the left and you tell me where price turned around on lift. To me, it had nothing to do with anything. News is a catalyst that pushes price from supply to demand, demand to supply. If you can start to think like this, you will have an advantage over everybody else you're trading against. Okay? Because the traders who try to speculate always end up losing the most money. Just look at this, understand that's a supply zone, understand this is a demand zone. This down here is a Fibonacci extension. Let's go ahead and take that off. All right. And this is what I'm seeing. How do I get my targets to the upside, right? Let's say this works out in the next 2 or 3 weeks. Well, I would just use fibs. I can come up here and use the 38. I can use the 50. I also have my own levels back there that I can use. So I'd be looking at accumulating somewhere in here. And then I would look at trimming at 1119, 1287, 1394. This is what I love about big sell-offs, especially from companies that I wouldn't expect to go to zero. And again, just again, look at the blueprints. You guys can ask me in a couple weeks. We can come back and look at lift and you can see the proof of concept. Okay. All right, let's go ahead and move on. So it is 10:24. We have about 6 minutes. Nothing's really changing here. Google's just kind of flopping around like a fish with the rest of the market. And the ES futures, when we come in there, it is up 2 points. So it is really just volatile. And if you're trying to trade this and you do not have levels, guess what? You're getting your butt handed to you, right? So let's click on ES just one more time. I'm going to show you that 5 minute. And remember, we created some levels a few minutes ago. Let's see how those levels are paying off. Notice that the 618 never broke down. Therefore, the trend that I measured is still intact. Notice that bids did come in at the 20 or the 38.2, and now the bulls are back in charge. Pretty crazy how that stuff works. You just have to execute at levels. Okay. Now, if a level is above you, I want to teach you guys something really quick. If a level is above you, whether it's one of your own levels, one of Simpler's levels, one of Trendy's levels, and say that price is underneath it, and there's a level to the downside. What I like to do is wait for the reclaim. Okay. So let's say that it comes in here and say I told you that was the bullish level, and say it dips a little bit. Okay. And then it comes right back up. After it reclaims, bracket orders go in. Entry, stop where you're comfortable, and then targets to the upside. When we reach targets, we then trim or bring this stop up. Okay, you take this stop and you move it up to where you're comfortable so that you're making money. When prices come down to the downside on levels, it's very straightforward. We can wait for it to reclaim. That lets us know that buyers are coming in. Look for the cloud. If the cloud's too close, I'm not taking it. Look for the histogram on the TTM Squeeze Pro. If it's yellow, it lets me know. Guess what? Selling pressure has eased up. I'm looking for a trade to the upside. We do the same thing, rinse and repeat every single day. And what I can tell you after a long time of studying this is that most traders lose when they speculate. Okay? You didn't trade a level. Somewhere between the two, you were like, well, I think price can go up here, and it just keeps coming down. Try to train your mind into being different. Just say, if this, then that. If price comes down to this level, I will go long with a bracket order. If price pushes up to this level, I will go short with a bracket order. Rinse and repeat. Okay? Yeah, I trade everything, Mike. Trade futures, credit spreads, options, equity. Yesterday we had equity on Google. Today, just started this Google trade here. Butterflies, and this is the butterfly. This is the one that I was pissed off about this morning. This was perfect. We would have done really well, but unfortunately, I only made 4%. I meant to buy today's expiration, but you could see that I bought February 17th. That was a big bummer. I was so excited about taking that trade. And this is where we took equity yesterday. That was pretty straightforward. Some SPY puts, yeah, so we intraday trade, we swing trade, we do it all. Yep, yep. Yeah, so I went over EMPH yesterday. Let's see if anything's changed. It's up $8.40. And check out this PMZ, by the way, folks. So if this was on your radar, boom. Can't make this stuff up. Your risk today was 48 cents. Your reward so far using edges, 212, right? From taking this at 207. And then look at that trendy edge. Boom. Perfect. 220 guys from 212 with a 50-cent risk. You tell me if that's not an awesome risk to reward. That's what I think about EMPH. So if it's on your radar and you have the right levels and the right indicators, it can make your trading, that much better, I think. Just my opinion. Okay. The bigger time frame is probably what you're after. We came into some levels here, it looks like. We reclaimed. There was a nice sell-off. It came into a zone, and now it's popped, but it's coming right into resistance. I just showed you that on the trendy edge. And if we come over to a weekly, this was a neutral strategy. So check this out. All right. So I must have drawn this yesterday or maybe the day before for you guys. And so we hit T2 to the upside and we're still neutral. And that's still, this neutral strategy is still in play for this particular name. Okay. Yeah. So anyways, that's what we got there on EMPH. Yeah. So I sell the PMZ as well. I sell the PMZ in the scanner, but I don't sell anything else individually. Nothing else is individual. So it's like a package thing. Anyway, so a lot of chop this morning. Nothing to really do here. I'm not interested in doing anything else. I am in Spotify. That's working out pretty well so far. It's a doozy though. Here, let's look at it real quick. I am interested in XLV as well. And you guys will see these trades, especially if they're swing trades. What I primarily do, just so that everybody can hear me in here that's listening, I primarily trade swings for the options room in here. We when we're trending, we trade a lot, okay? But um, it would be difficult for me right now as a guest trader to go back and forth trying to, push out every trade I take, okay? Especially when the market's trending. We're pretty much around probably somewhere between 2 to 5 trades a day easily when we're trending. When it's choppy, we kind of slow down things. Okay. Anyways, this is Spotify. This was a resistance, and I think if we can hold above here, look at the momentum, red to white to green on my candles. Down here on your TTM Squeeze Pro, you can also see what's going on there. I really like this as long as 124.86 can hold. Yeah, no problem, Dogbird. Have a good one. And guys, I appreciate you. Have a great weekend. We'll see you back next week.